You say that the Federal Reserve and market participants are underestimating inflation risk. It seems like in these headlines that they are acknowledging that they underestimated the inflation risk. And by the way, just as a personal aside, I'm always sort of tickled/troubled by the idea that we throw out from the measure of core inflation food, volatile food and gas prices. I can't imagine what's more core to the American experience than eating and driving.
Yeah, that's it, Tyler. I think, Rick said it. The Fed wants to buy time. They don't want to act. They certainly don't want to act too soon. They recognize that, look, the last 10 years, they've been trying to gin up inflation with very little luck. Prior to that, they've had a previous 40-year history of keeping a lid on inflation. So clearly, they want to err on the side of too much stimulus, too much inflation, knowing that they can circle back and tamp it down later. That said, I think there are two pieces that we need to focus on that really are sticky, not just the food and energy side that you talk about, but also labor costs, which really are starting to tick up now, and housing prices. The fact is that owner's equivalent rent accounts for a third of our CPI calculation, and that's starting to filter through. Rents typically don't go down.
Yeah, I mean, it's such a key point, Lindsey, and it goes back to what we're talking about here around the talk of taper and specifically what that could look like and the mortgage-backed security piece of this, given the fact that housing has been so robust, I don't think is even the right word. It's been on fire. And we've seen that not only in terms of home prices, but now we're seeing it in rents as well. So are we getting or did you expect to get a little more meat on the bone around how the Fed is thinking about substantial progress? How does this set us up as we go into the July meeting and then the August meeting out at Jackson Hole?
Well, it's interesting because the Fed was pretty clear that the economy at this point, broadly speaking, still needs support. So there was no rush as we're reading through this commentary to immediately roll back some of these emergency measures. Now, they are beginning that conversation, but again, no sense of immediacy here. They do want to be very patient, very cautious. At the same time, they are recognizing these pockets of strength, particularly the housing market. And so that's where we see this momentum for the discussion to target MBS purchases. So they're really walking this fine line, again, acknowledging some of the vast improvement, but saying, wait a minute, this isn't necessarily broad-based. And we do need to keep our eye on the ball, still keep our foot on the gas, and maintain this very accommodative policy position, at least for now. So they're buying themselves time, I think, over the next couple of months until we get to Jackson Hole or beyond, when it's likely that we hear the language of tapering to come in the coming month.
Shepard Smith here. Thanks for watching CNBC on YouTube.